whenever there is a technological change, there's always opposition groups to that change and wondering if it's safe, wondering if it's a good use of resources. And technology in the long run always wins out. And so I think we're seeing that happening now in the Bitcoin space, where we found a way to automate and make far better some of the ways we deal with money. And of course, they're energy intensive, but a lot of people miss the upsides you get from that. And really what the invention of Bitcoin is it speeds up settlement, the ability to actually settle final value with each other in, depending on which layer you're using, seconds or minutes. And so I think that's what is a big piece of what's transformative here.
Over the course of 14 years, various thought leaders, legendary investors, developers, and critics have attempted to encapsulate the essence of the world's leading cryptocurrency and its underlying network in succinct terms. To regulators, policymakers, and a majority of U.S. lawmakers, the dominant crypto asset is perceived as just another highly risky and speculative venture. Similar views are echoed by staunch traditional finance figures like Warren Buffett and Charlie Munger of Berkshire Hathaway. For the average investor seeking the next lucrative investment opportunity, Bitcoin represents a chance for extraordinary returns. On the other hand, some see the leading crypto asset as the future, a powerful tool for rectifying the mess caused by proponents and beneficiaries of traditional finance. This latter group comes closer to grasping Bitcoin's true value proposition than others, although their assessment may not entirely capture its essence. With each new event, the world gains further insights into Bitcoin and its remarkable functionalities and applications. One such event is the recent and possibly ongoing banking sector crisis in the United States, where each multi-billion-dollar bank run has reinforced what Bitcoin advocates have been emphasizing for over a decade. The traditional finance industry is unsustainable, prone to failure, and often unfair to everyday investors and depositors. According to renowned financial analyst Lyn Alden, Bitcoin is revolutionizing multiple aspects, including money, energy, and the role of banks and other traditional financial institutions in today's world. Alden shared her perspectives during a fireside chat titled Bitcoin Energy Systems and the State at the third edition of the Bitcoin Miami Conference. She believes the world is entering a new era of hard money championed by Bitcoin, which will address many shortcomings of old payment and settlement systems, reducing reliance on banks. Centuries of attempts to perfect settlement systems have finally found success with Bitcoin.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Centuries, the two main roles of banking were basically credit provision and making money move faster. Making money move faster has been this multi-century problem that humans have faced. So whether it's trying to bring gold across the Silk Road and you're doing these old paper bills of exchange from 1,000 years ago, they have bills of exchange written on papyrus. They have the Hawala system. It's a 1,000-year-old system of monetary channels, of network effects, people, transmitting value. And so this has been a problem that has been trying to be solved for a very long time. And as we got better communication systems, better transportation systems, it's kind of sped that up. And so really what Bitcoin does is it just rapidly speeds up underlying settlements with a bearer asset. And so one distinction I like to point out quite frequently is that in the mid-1800s, when we invented telecommunication systems, and then specifically when we had undersea cables and connected all the continents, we sped up transactions so quickly, but we still had underlying settlement be very slow. And that created a huge arbitrage, especially for banks and central banks, to be able to that gap has been wider than it was for the centuries that preceded that. And really what the invention of Bitcoin is it speeds up settlement, the ability to actually settle final value with each other in, depending on which layer you're using, seconds or minutes. And so I think that's what is a big piece of what's transformative here. And it's something that I think people are too myopically focused on the energy usage and not focused on enough of how much this automation improves productivity. So one thing we notice is that if you look at different types of monetary environments, you can kind of separate them into weak money, strong money, or medium money. And generally in weak money environments, let's say Argentina, for example, you actually don't see a lot of debt and credit because lenders don't want to lend in that unit because they have no idea what they're going to get paid back in terms of purchasing power, even in, say, a 3-year period. On the other hand, if you have a very, very hard money environment, you don't see much credit either, but those are, of course, far more stable. You see lots of growth, for example, throughout the 1800s, But you don't see a lot of frivolous uses of debt and credit because borrowers are very cautious about how much they want to borrow in such a hard unit, so that they're more likely to only use it for short duration, high impact types of functions. Whereas we're kind of in this phase now, when you look at, say, developed market fiat currencies, where they're actually kind of in this like weird sweet spot where they have stability, but that brings about long-term instability. So by having this like gradually devaluing unit, both borrowers and lenders want to create credit in it, and so it functions for a while, but then you build up such a highly indebted system that in itself creates its own instability. And so that's the environment that you actually build a maximum leverage. And so if you were to have a world where, say, Bitcoin is continuing to grow far larger, let's say 10, 20 years from now, and it's this global network of hard money, I don't think we'd see anywhere near the size of credit. You'd still have some credit, but you wouldn't have like the long-term frivolous credit, right? So we can kind of separate two types. There's short-term high-impact credit, business expansion, short-term liquidity, that type of thing still makes sense. But you wouldn't see the kind of debt that's like permanently on capital structures. So for example, Coca-Cola is a 100-year-old company, they still have debt. And the answer is why? And it's because really what they're doing is shorting the underlying currency. It's a cheaper part of their capital structure than equity, and that would not make sense in any sort of hard money environment. Same thing with 30-year mortgages or 30-year government bonds. Those types of longer, permanent rolling debt as part of a capital structure does not make sense, but shorter term credit still does.
According to Lyn Alden, Bitcoin accelerates settlements and eliminates the advantages enjoyed by traditional banks and central banks. Its fixed supply of 21 million coins removes the need for intermediaries, providing a more efficient financial system. However, critics raise concerns about the environmental impact of Bitcoin mining. Alden and Natalie argue that utilizing clean energy sources can mitigate this issue, emphasizing the need to consider the positive aspects Bitcoin offers to global investors. Here are additional clips from their insightful discussion.
Banks as a financial services company, I think, still serve somewhat similar roles, but diminished. And so, for example, you still have the credit of various types, but instead of a fractional reserve system, you'd have time-linked deposits to those types of lending. And then number two, it'd still be providing services. Like we see, for example, today there's collaborative custody. That's a financial service that some people can make use of. And there are other adjacent services. And I think a general theme is that they're still working with people to help them use money in potentially more convenient, safer ways to varying degrees, but that their overall roles diminish because their arbitrage opportunities are diminished. Whereas on the other hand, I think, for example, tying it back into the energy theme, I think the role of energy companies becomes larger in that type of world because energy is more linked to money in that type of environment. So banks down, energy producers larger, more publicly relevant.
Yeah. Energy is such an important topic because we're at this civilizational crossroads right now where we're asking the question of can humanity survive the type of carbon-intensive economies that we've been reliant on for the growth that we've seen over the past several centuries. We need to use more energy. The question, however, is how can we do that in a more carbon-neutral or less carbon-intensive way?
So in general, I think that like a lot of things that become politicized, there's too much focus on one number, which in this case is carbon. I think when you think about holistic use of energy, it's about price, it's about how clean is it overall. So air particulates, water usage, things like that. There's multiple variables that defines whether or not an energy source is quote unquote clean or not, and in what way, and is its impact, whatever environmental impacts it might have, is it happening at the source of production? Or is it happening elsewhere? For example, mining materials and then not emitting pollutants at the source of actual on-site production. So there's also things about location and types of pollution that might be associated with energy. I think a general thing we see, and there's others that have been writing about this, I think, quite elegantly. Like Ross Stevens in his letter in 2020 wrote about this, that basically what Bitcoin mining does is it allows humans to more readily move towards sources of stranded energy rather than always having to bring energy to us. It helps us go out and find that. And so I think one of the things that it does is incentivize capital-intensive processes for like long-term energy things. Because, and Alex Gladstein wrote about this too, which is that you have an environment, especially in developing countries, where they want to build an energy resource. Let's say a hydroelectric dam, let's say some large capital-intensive thing, and then you have a chicken and the egg problem, where if you build up an energy source, the question is, are there going to be immediate buyers for all that energy that you've just spent, millions and millions of dollars building out? On the other hand, if there's not enough capital to want to build out those energy production, then there's not going to be usage of that electricity either. It's like a chicken and egg problem. And so one of the things that Bitcoin mining can do is help bootstrap that. It can incentivize it as a guaranteed buyer for, say, the first few years of production, and then as other uses of energy come in, they can outbid the Bitcoin miners, because the Bitcoin miners need the cheapest electricity around. And so I think you start to see that kind of better economic incentive for it. And I think then the role becomes, there's so many jurisdictions in the world, and energy gets tied into government policies and things like that. We see, for example, windfall taxes on excessive energy production. We see things that try to incentivize one type of energy over another, and they might not be based on technology, they might be based on perception.
Recently, Forbes reported that Bhutan, a small landlocked country in the Himalayas, has been quietly mining Bitcoin since 2019 using its abundant hydroelectric power. Bhutan's plan to expand its mining efforts could make it the second country, after El Salvador, with a state-owned Bitcoin mine. This highlights the utilization of renewable and clean energy sources that would otherwise go to waste. If successful, Bitcoin could have significant implications for Bhutan's government and its people. It is hoped that more governments will follow suit and embrace the opportunities of this promising future. Share your thoughts on Lyn Alden and Natalie Smolensky's fireside chat in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.